guys, welcome back to our channel with our VIP long-term guest. After Jim Rogers, it's now time to check out with Mirko what goes, in particular in regards to China. Mirko, as we all know, works in China and is on holidays currently in Thailand. Mirko, the recent trip to China, how was it? How was the feeling in China? Tell us, how do you feel when being in China?
Yeah, it's always good to be in China, but it's always nice to come back to Thailand, of course, also for holidays. It's always nice. China is, in my opinion, in a good way. So they prepared everything for a bright future. It looks very good. Also, the economic in China will raise, I'm quite sure. And also, I'm confident for the stock raising in China, especially in Hong Kong, Hang Seng. I'm still confident for that.
Yeah.
There's no change since 2 years, in my opinion, to that.
Speaking briefly about Hang Seng, Xiaomi, for example, the valuations have been quite high, in particular Xiaomi. What do you think about that?
That's correct. Xiaomi, it's quite expensive. It's a little bit speculation also. I would prefer more like Tencent, Alibaba. I think they are more slowly growing, but more stable. So for long-term investing, I would more recommend that one. Xiaomi is for sure a hot stock at the moment. And yeah, it can go up, it will go up, but the question is, where is the limit?
Yeah, where's the limit? That's always the good question. If we know beforehand, then
I don't know.
Yeah.
I reduced my Xiaomi stock shares a bit by 50%.
Okay.
So, but I still invested, and
Yeah.
I believe in it.
Yeah. So in China, kind of economy growing, comparing it maybe to the US. How's the story when you compare China with the current situation in the United States? Where's the better chances, you would say?
I would say in China is the better chances at the moment, but US, if we see now after this rebound after the last drawdown in beginning of April, now we're running again in a zone which is quite high priced.
Yeah.
So I would say patience, wait a little. I'm sure we see this year another chance for buying stocks cheaper in US.
Okay, speaking of cheaper stocks, the recession story is obviously quite a big one. It's like, how much of a chance in regards to a recession do you see in the US?
50%. I'm not sure. I'm not sure if a recession will really come. At the moment, the hard facts showing us nothing, zero. There's no any sign of a recession. In the soft facts, in the soft data, so the sentiment and so on, show us very clearly a recession will come. So nobody knows at the moment. We have to wait to get more hard data in the next months. I guess in July or something, we know more about that.
Soft data, hard data. We got the court ruling in the US first. The tariffs were deemed illegal. Now they're back in the country and kind of back on the markets. Impactful momentum for stocks. We see stock markets are kind of maybe a bit shaky. How do you think about it?
Honestly, I do not look so much for short-term politics decisions or tariffs or something. My strategy, I think everybody knows, it's a long-term investing in stable dividend values. So, for example, yesterday I bought Amgen, to which the pharma branch was under pressure in the last because of these tariffs. So I used the chance to rebuy in this field a bit. Same as some REITs like Alexandria Real Estate, which is also as a good chance to buy now. It's cheap, good dividend, stable companies. That is more my strategy. The short-term things is not so my idea of investing.
Yeah. And the recession worries, the recession story, that could be of impact, especially for your dividend stocks. How would you see and how do you see that under the current context?
In case we really get a drawdown in the economic of America, like a recession, even then I will use the chances to rebuy stocks, shares, stable stock shares. You have then the chance to get how Warren Buffett says, the dollar for 50 cents. You know, that is, of course, a dream for every investor. So keep a little bit cash, invest in stable values long term. That's my idea of investing. So, and this I will follow up all the time.
Tell us a little bit maybe more about your strategy, because you're focused, as I know you, on getting highest dividends as much as possible. So for you, the entry price is kind of the key market momentum, right? The key indicator, right?
Exactly. The purchase price is for me very important of my stock shares. It must be not the highest dividend. It must be in how to say, imbalance between the pricing, what I get at the moment, and the really value. So it means I try to buy it cheap, but a good quality. This is most important.
Yeah.
High dividend alone is never a good idea to buy stock shares, because this will fail in the long term. So you need a balance between stable growing of the companies, good market positions, and good dividend rates. That's the key point of that strategy.
Looking at the current market situation, we see oil prices started to kind of move lower. To me, they are really falling fast, I might say, next month in particular. The Australian dollar is kind of giving away some profits. We've seen recently long-term looking bullish, short-term looking like kind of quite bearish. US, China, and in particular China and Australia. How do you see that the entire global situation is gonna get some dent in the markets?
Regarding the oil price, I fully agree with you. I also see the oil price deeper in the next time. I have already took some good companies, oil companies, on my watch list. So I'm ready to buy them, but I still carefully. But I will, let's say, if this happen, what we both expecting, then I would here invest definitely.
But again,
because in the very long term, I see a rising oil price, definitely.
Okay. And that would help then these companies like,
buy
as you
it
mentioned,
cheap,
right?
buy it cheap with good dividend rates and keep it in the long term. I guess that's maybe a good strategy at the moment for kind of cyclist values like oil or iron or whatever.
But looking towards the recession, doesn't also falling oil price tell us there might be less demand and the economy is falling?
For short and middle term, could this happen? Definitely. But as deeper it goes, as better become the pricing of these companies. So it's always important to have some cash in the backhand. So
the China story in regards to growth. If you see like growth in China, and we have the tariff situation, right? Negatively impacting China's economy. Slightly noisy now. Is it slightly impacting as well if tariffs are being implemented or kind of grown further, that the economy in China will face this bright future?
I think in the long term, no problem for China. But maybe in the short term, we can see good prices, or deeper prices. This could happen. This will short-term affect, of course, every company. But I believe in the long term, we have here really good chances still in China.
You don't worry much about the Chinese government like impacting and kind of doing something funky like they've done in the past?
Not really. I think they learned a lot out of the past. At the moment, it looks everything quiet, balanced, and controlled, and they are very clear in decisions. So I'm confident that China in the next years, they do a good job there. I'm quite sure.
Okay. The Chinese yuan and the Hong Kong story. Hong Kong has calmed down as well, as we understand, right? So like you see political stability in the Chinese area in general, yeah?
Yes, except Taiwan is always a little bit, how to say, up and down and back and forth and discussions, of course. But I not see there any bigger, that kind of war or something. I do not see that at the moment.
Yeah. The third one we haven't spoken about is Europe in general, right? After America, Asia, and the European side. The DAX has been rising through the roof again, new highs in the DAX. What's the biggest chances you see in Europe?
I see good chances in Great Britain, for example. Great Britain is still good priced. A lot of value companies, they are good priced still, and they are offering good chances to invest. Also, whole Europe is quite cheap priced still, even it raised already quite high, but it's still a good pricing there. And for me, in my personal opinion, I would try to invest a little bit more in Europe than in US at the moment.
Yeah.
So it moves a little bit.
Yeah, okay. Soft data recently, PMI data from Germany have been disappointing. So we see that the numbers are not really out of the woods yet. In America, they have been positive. Yeah.
We have to be very carefully when we see the German market, for example. The DAX has nothing to do with Germany, at least. 95% of all the money, what is made by DAX companies, is made in foreign countries. So If we really look at the German market, we have to look at the MDAX or TechDAX or whatever in the smaller companies. When we take the DAX itself, it has with the German economy not too much to do, nearly nothing. So for the DAX, I'm very confident. I see the DAX by 30,000 in the next 2 years, for sure.
Oh, that's a valid statement. Okay, that's quite interesting.
I'm very quite sure, because it's that the companies which are listed there are still quite cheap. In the so I think they behind the market already years long. So now it's the time that it turned a little bit in direction to Europe.
So wouldn't it all mean that technically Europe's still undervalued, China obviously growing, America overvalued? Is that where you would see a big, a global shift?
Exactly. USA not generally overvalued, but big parts of that market are overvalued. I see a little bit a coming back in US, but overall I'm quite confident for all stock markets at the moment for the next 2-3 years.
Okay, that's pretty good. Yeah. Guys, thanks a lot for tuning in today, and wish you all the best in trading. Mirko gave you some spot-on ideas, I might say, kind of potential buying opportunities for you as well. Don't forget to subscribe to our channel as well, and leave your comments as usual under the video. See you next time.